Summer Friday, but we're here at a moment when the investing landscape is shifting really fast. Interest rates back in play, inflation's still a concern, the markets are unpredictable, we're hitting all-time highs. And today's investors are more active, more informed, and more strategic than ever. And so that's what today is all about. We're going to talk about what income investing looks like in 2025. We're going to explore how investors are rethinking income, not just through bonds or dividend stocks, but things like option-based ETFs and other innovative strategies. Yieldmax is, of course, right in the middle of this evolution. Their ETFs are, of course, built to meet investors where they are, offering exposure to companies people know, using active option strategies and paying out monthly income, often with significant yield potential. So you're about to hear from these guys. They're experts in really helping shape this next chapter of income investing. And so once again, thank you for joining us. Thank you for the Yieldmax team for bringing us together. As we get going, we're going to do a moderated talk for a little bit. If you have questions along the way, we're going to have time at the end. We definitely want to hear from you all at the end, so please save your questions for then. And with that, let's meet today's speakers. To my left, we have Chuck Fuller, Senior Portfolio Manager, NASDAQ Dorsy Wright. And all the way to the right, we have Jay Pestrichelli. Jay runs trading for Yieldmax at a title, and Mark. Jay stands.
That's awesome.
And Mark, tell me if I'm messing this up. Mark Wagenin.
No,
Wagenin.
it's cut off anyway, it doesn't matter.
Okay.
What is it?
Sure.
It matters.
Van Wagen.
Van Wagen. Okay, he's the host of Retire on Dividends YouTube channel. And guys, thank you so much for being here. Thanks everyone for being here with us today. Before we dive into the questions, I want to give you each time to very quickly, do a quick round of intros for yourself. So you heard the bios, but love for each of you to just take one sentence and share what you're focused on right now in your work and what you're most excited about. I'm going to start with you, Jay.
Great, thank you. By the way, Kay, thank you for being here. Great to have you helping us out today. So I'm Jay Pestrichelli, Portfolio Manager for all the Yieldmax funds, as well as running trading at Title, who's the advisor on all of the Yieldmax products. But I was going to say, like, this has been such a great event so far, a great week. Just looking at the impact that Yieldmax has had on the street, like a lot of the people that we went and talked to this week, there are things about building the right structure to support the ongoing growth, the new products that we're developing in these suites. And the street has been extremely receptive to us. Right? When we walk into the Citadels and Goldman Sachs and BAMLs of the world, and they want to do more, and they are really interested in the suite that you all are already interested in, you know the benefits of. Just kind of opens your eyes to that. So it's been kind of really great week. We're going to continue to build out our capabilities and innovation in Yieldmax.
Thanks, Jay. Over to you, Mark.
I guess as a quick intro, my name is Mark. Full-time, I do accounting work, but obviously I'm here because of YouTube. So on YouTube, basically, I talk about dividend investing in general, but I didn't really, do well until I talked about, Jay's products over here, starting with Tesla, and I just checked. It was exactly almost 2 years ago, my first video of Tesla, where I talked about it, and I listened to it. I didn't do that bad. I thought it would be horrible.
Were you nice to us? You weren't nice to us all the time.
That video I was. It was later on, but No, I've been covering their funds for 2 years. I haven't stopped, obviously, because the demand showed it. The community spoke out, and they said, I want to hear about it. And I covered Misty, which is their biggest fund from day one. And I'm glad I did, because it's a monster of a fund. And I enjoy talking about their funds, and obviously I invest in their products as well. Thanks for having me.
Awesome. Over to you, Chuck.
Yeah, so my name is Chuck Fuller. I'm with NASDAQ Dorsy Wright. I've been with the firm for probably about 18 years now. Mostly work as a portfolio manager, although I wear a lot of hats. I do a lot of the programming, a lot of the kind of quantitative research that we do at NASDAQ Dorsy Wright. And really we're here today is kind of to talk about FEET and FIVE, specifically. We worked with Yieldmax to put together those funds as a kind of a way to manage these single stock covered call ETFs that they brought out.
Excellent. All right, let's get into it. Mark, my first question is for you. You just talked about your channel. It's been 2 years you've been doing it now?
6.
6 years, okay. 2 years covering.
Yieldmax.
Okay, got it. So you obviously focus on building wealth through dividends. How, over time, how have your own income strategy shifted in response to the new products out there, like ETFs and Yieldmax?
So they kind of, before I covered Yieldmax, I wasn't doing options, but in a degenerate fashion, and I kind of stopped. Then once those funds came out, it was sort of a reminder to me of the power of options And as I started covering their funds more and more, because thankfully they post their intraday trades. So obviously I was learning more and more about options myself, so it's changed my investment strategy to get me more into options. Obviously it's helped my channel grow as well. But yeah, in fact, I'm all income focused. And it reminded me that it is possible to retire earlier than, the old age of 62 or 65. So I got out of the habit of thinking that way, and it kind of changes the whole mindset and way of thinking in general. So.
Yeah, so when you first started, you were focused on just general option strategies, and over time you narrowed into dividend because the community and the people around you were like, we want more of this?
Well, I started with dividend investing.
Okay.
My channel did awful.
Oh, okay.
And then once I start talking about, I guess, high yield dividends.
Yeah.
But yeah, I covered options, but I wasn't, good at it.
Yeah.
I traded GameStop and got destroyed. But,
Okay.
but yeah, no. Covering their trades does help me actually learn about options myself. Seeing experts like, Jay and Scott at work, it made me learn a lot.
Awesome. I think, the growth of your channel is a testament to just income investing being a cool thing. Like, we're all here talking about it, and there's a lot of innovation happening.
It's the
so.
mafia.
There you go. All right, Jay, we were just talking about this explosive growth in options-based ETFs recently. What differentiates Yieldmax trading approach and philosophy from maybe some others in the space who are building similar products?
Yeah, we didn't invent cover call writing, right? It's been around for a while, and it's been around in ETFs well before Yieldmax was launched. I think if I was to put the characteristics that really differentiate Yieldmax, it is what the brand promises. It's max of yield. It's as much as we can sell for, and then turning around and distributing it back to the investors. I think that's the first characteristic that I think is unique. Nothing against Jeppies and QILDs of the world. It was great that they kind of, started us off on our path, but then to really get to stuff that was, much, I'll say to this group, much more interesting when it came to yield rates, right? And so that I think is different. The other one is the level of activity on the funds, right? It is not a set it and forget it attitude. It is, hey, if we can be active on this and capture gains early and sell calls again, that might make more sense. Any option strategy, there's no formula that always beats another one, right? But if you can find the ones that can consistently get you a little bit of advantage, you're going to want to do those things. And then the last one is we're constantly changing and evolving. Like Mark hated it when we added call spreads to the call selling, but he only hated it because it just gave him a lot more work that he decided to do on his own anyway. But I think but when you look at that difference, right, to adopt, which at first was like, are people going to get call spreads versus calls? No, it made the most sense. You see the performance when you get the pops in the stock. You actually capture more upside. And it creates a better blend versus just selling at the money call and let it go for a month. So I think it's the higher yields and then the trading innovation really have helped Yieldmax stand out.
Yeah, but obviously you're building a community around the products. Do you ever get ideas from people in your community? It seems like as people become more...
The whole reason Chuck's here is because people said, hey, could you tell us which one's going to do the best? I was like, no, I can't tell you that. Let's find somebody who can, right? And so lead in there, right? It was like, don't ask, I'm seriously, how many interviews did I do where people are like, just tell us which one's going up, Jay. I don't know which one's going to go up. Let's get someone that does that for a living. And so that is how we started our relationship.
Great segue. Over to you, Chuck.
Right.
The 5E, unique collaboration between NASDAQ, Dorsy Wright, and Yieldmax. Talk to us about the vision behind these ETFs, how they came to life, and the role Dorsy Wright plays in this collaboration.
Yeah. I mean, Jay and team came to us, I guess it was, sometime last year, with this exact problem, right? They had all these different, single stock cover call ETFs. But yeah, you get the question of, which ones should I buy? Should I just buy one? Should I buy all of them or some subset? And so, what we did is, if you're not familiar with Dorsy Wright, we're kind of known for relative strength investing. And so all that is just the idea that, that stocks that have gone up or have outperformed in the past tend to be the ones that outperform in the future, at least over longer term periods. And so we've been doing this since 1987. We've run a lot of different portfolios based on this kind of strategy. And basically we just took what we always do and we applied it to the Yieldmax alignment. And it turned out it worked out very well. And so, that's, how basically the two got put together, feed and 5E. Feet being, the one that's just invested in the, single stock covered call ETFs. But then we also noticed, because the thing about covered calls is that you're capped out in terms of the amount of gain that you can get. And this is a relative strength strategy. We're trying to buy stocks that are going up, right? And so we're inevitably going to get capped in some of those. And so for somebody who's more of a kind of a growth and income investor, we wanted to have a strategy that also worked maybe a little bit better for them. So that's kind of where FIDE comes into play, where we take 60% of the money and put it into the covered call ETFs, and then put another 40% in the underlying stocks, so that they can, even if a fund gets, or the stock gets called away in one of the funds, you can still participate more in the relative strength upside. So, yeah.
So we talked a little bit high level on the products, but I think everyone here is probably curious to hear about how to actually use them and talk about some of the use cases and applications. So I want to turn it over to you, Jay. Ideal use case for Yieldmax ETFs in a retail portfolio. What does that look like to you?
Look, that is a topic of debate, but it should be, because depending on how they are going to be used, right? So when you think about like a use case for Yieldmax, it could be folks that already have concentration in the stock. You own a bunch of Apple, and you're like, gosh, I could use I'd like a little more distribution on this. So if you could learn to sell covered calls yourself, or you throw a 10, 15, 20% allocation into Apple, and then you can use that in conjunction together with the long stock. That was one of our original use cases that we thought would help us, which is actually the use case for Apple's early launch, right? We said, Apple's the most widely held stock, let's get this tool out there for people that want to use it. But I think what we're finding now is more folks are interested in the yield itself. I feel like I've read in multiple comments in caps, stop telling us to reinvest the dividends. But for me, is I like the growth aspect of it, but we understand that people want that cash, right? We understand that people want to be able to, it's called Yieldmax, you want some yield, okay, I get that. So I think for me, when I think about the design of these products, having some level of reinvestment back into the product makes a lot of sense. If you're pulling out 50% a year on a MISTI, 100% a year on a company, whatever that number is going to be, you're like deliberately divesting to cash. And if that's your entire goal, you'll find yourself kind of writing down your position because you're deliberately letting it go to cash, right? So I think there's some level of dividend reinvestment that is important. We see that, by the way, all the time. A lot of folks are buying the ETFs right after the distributions. Great. But we know some people just like to yank the dividends out, and that's it. Like there's a flavor there for everybody, and it's why we over distribute, right? It's why we don't hold anything back in the funds. It's why we continue to give more money out than anybody else does.
I really appreciate that you're in the comments. I feel like BlackRock's not doing that. They're not in the comments saying what you guys are saying. Chuck, for Feet and FIDE, use cases, applications, how do you think about using those within a portfolio, and how is it different than traditional income strategies?
Yeah, I mean, I think the main thing that makes it different is that it's tactical, right? Like most income strategies are going to be a little bit more static, right? Whether it's your bond allocation, or whether it's you own a portfolio of dividend ETFs or dividend stocks. Typically, people are managing that in kind of a static way and just collecting the income. Here obviously we're being more tactical. We're using relative strength to say, okay, specifically with Feet, let's say that here's the 5 best funds that we think can appreciate the most within this universe. And the key thing is that we have a very strict sell discipline with this. Whereas a more traditional kind of approach, it's not going to have that. If you write a position down 50%, it is what it is. You just if you have a static weight to it, then you're just going to keep doing that. But with ours, we're gonna be constantly looking to get out of the laggard stocks and try to reinvest that money into stocks that are doing better. Within the universe that we have to work with. And so I think that's kind of like the main aspect of it that really makes it different than a traditional approach, and we think can set it up better for long-term success.
Okay, Mark, I want to ask you next, because you must have, a lot of people following you, a big community, people at different levels. People who are new coming in to sort of the ecosystem you're building, what advice do you give someone who's just starting their journey with income ETFs? What are the common questions, or what are some of the best practices that you offer?
Well, I guess it depends what type of questions, but start with my videos, right? If you want to understand how the funds work, I basically break down their daily trades and how the funds move up and down. But, you know, like Jay said before, jumping into these funds, expecting to collect 100% cash, it doesn't work, you know, the way you think it's going to work. Unless you own Misty, of course, and Plady and Hui, you know. Maybe it works for those, but ideally, you know, when you're paying out such a high distribution, you have to think of it a little differently. But to newer investors, I always default to more so the basket of stocks, either whether it be Yieldmax, whether it be your zero DTEs, yes, and the fund, you know, the various funds of funds, Chippy, you know, the weeklies. Start with those. You know, don't be jumping into the individual stock risks, because you have, obviously, unless you believe in the underlying and you understand the funds, it's probably not, you know, the best idea to start with those.
All right. Innovation always comes with a learning curve, so let's dig into some common misunderstandings. And sometimes education can come with talking about what people maybe aren't getting and sort of correcting the record from there. Jay, I'll start with you. Biggest misconceptions investors may have when it comes to covered call ETFs, and how do you work to address those? These are, you know, complex products for the average retail investor, so tell us about that.
Yeah, I think the biggest misconception, I could name 4 or 5 of them, and there's some that are popular right now, but to me the biggest one continues to be, hey, your covered call didn't beat the underlying in an up market, right? Almost will never happen, right? So that's the idea. He's making a face. Yeah, so like this is the idea where the option strategy itself is designed to generate cash for giving up the upside, right? And so, look, we're picking interesting volatility names, right? Options on, let's call it Tesla or Coin, I should say, can be a lot more interesting than options on Apple and Meta, for example, because you're just going to get a lot more volatility and you're going to make more income from selling the options. But the goal of beating the underlying was never, ever the goal, right? That was never even a stated piece. If that's your case, do not do a covered call strategy. Now, will you be able to offset some losses in a down market? Yes, absolutely, right? You know, when we take a look at performance of our funds versus their underlyings on those 4-week periods when we have distributions, it's about 50-50 that there's actual outperformance, but that is not the goal. So to me, that's the biggest misconception is you're in these because you want the yield. We just happen to be using MicroStrategy as the means of generating that income. That's the vehicle. So I think that's, to me, one of the biggest misconceptions. But look, that's the point. It's the yield piece, right? We always go yield first, growth second when it comes to Yieldmax.
Yeah. And a lot of conversations at organizations are like the decisions you make are as important as the ones you decide not to make. And it sounds like you have a lot of products going to market. So can you tell us about how the prioritization works and maybe some things that you've passed on strategically as a company to focus where you're focused now?
Yeah, that's great. Great question, because you're right. You watch the list of funds that are coming out, whether it's the baskets, whether it's the singles, whether it's the inverse ones, which I still think are the coolest ones. I know nobody else does, but that's just me. Maybe that's my little project. But I would say the products that we're putting out there are designed for different folks, right? We have basket funds like Alti that are designed to make the most amount of income we can with some upside, and then you have the ones that are like the Target 12s that are more of an institutional product, right? So all of those pieces of innovation that come out, there was a deliberate decision there. There have been plenty of ideas we've passed on. We have passed on leverage for a long time, right? We continue to be asked, why not do them 1.5 times and get a little more income? Look, if you don't like the NAV decline now, you're gonna hate it more with leverage, right? Like there's things we passed on doing condor strategies, right? So people have filed for a lot of products and we've looked at them and we would say, look, like this one's just not gonna work. Like it's not gonna meet the brand promise. I think the leverage piece continues to come up. There's other folks that are doing leverage products today. I think we've shied away from it because if our focus is yield, why add that actual and natural decay that can occur in an ETF just from the compounding aspect of it, right? So again, the right product for the right people makes sense. Yieldmax brand stands for yield, and I think that's kept us on a straight line there.
Awesome, keeping it focused. Chuck, we were just talking about maybe getting feedback from investors, reading the comments. What feedback have you guys gotten on Feet and 5E so far? And how looking forward, how should people think about how they might evolve going into the future?
Yeah, I mean, we've definitely seen some interest in feet 5e. I mean, I think that people are happy that they have a way. Obviously there's other ones with Yieldmax and different ways to play, but they're happy that they have a way to kind of use these underlying ETFs in a more intelligent way. And so yeah, I think there's definitely been some interest there. In terms of how we might see it evolve in the future, they're putting out new ETFs constantly, and I think that's great for our products specifically. Right now there's obviously a lot of big growth names in there that are very volatile, but we're also seeing other names come in, with things like JP Morgan and Disney and Berkshire Hathaway that just came out, and so for our strategy that's a good thing because what you kind of want is like if we're in like a really good bull market, then sure we're going to own Nvidia, we're going to own Apple and all those kinds of things. But if we get into a not so good market over a longer period, then you're going to want to kind of like go into things that aren't as growthy, right? Because those are probably going to things that go down more. And so having more of those things like what seems to be happening, I think it's a good evolution for the overall feet 5e suite.
Yeah, so it's not just the products that are evolving, it's also how people discover and learn them. So I want to ask you, Mark, about how people are using platforms. A lot of people here are creators on these platforms helping educate people. A lot of demand in digital channels to learn about these topics. I think it's great there's so much appetite for learning, and I think there's been a lot more due diligence after 2021, 2022 after that. So what role do you think you play and other creators in guiding investors through increasing complexities as they become more mature in their investing journey?
Well, I'm the Misty guy, so.
TM?
Yeah, pretty much. So, I don't know, they basically, again, I started covering Yieldmax, way back when, I'm not gonna say day one, but, really early in the stages. So I've kind of become somewhat of a go-to person, at least in the YouTube space at first, and now on X. But basically, I'm the person that they go to me. People call me a Yieldmax shill all the time because they think I'm under cahoots with them or something. But no, I cover their funds because, well, I like their funds and it does good for my channel. But yeah, no. So people come to me because I talk about their funds and I talk about them in detail and I explain again, day in and day out, why their funds are moving, how they work in and out. People, again, they're always thanking me because they said they would never understand why the fund does what it does. Because obviously people from the outside looking in, there's a lot of hatred towards these funds, unwarranted, but they just simply don't understand how they work. So
Yeah, if I could add to that, Mark, I think education is what your channel has always been about, and explaining what to expect, right? As a fund manager, you want your investors to understand what they're going to expect and why to invest in the fund, and that should be their individual thesis. For someone to dig into and look at all of the positions in trading in Misty, it's daunting, right? So the fact that you even project, dividend rates, you even be like, oh, they're going to be capped here, oh, they're capturing more upside, right? Like all of that information it's why people follow you, because I think they're getting this information that helps them make the decision. So I think the education has really driven people to actually use those products. So no, we're not paying you on the side, by the way.
So for Yieldmax, part of the strategy then for you guys is, do you think it's sometimes better to work with someone who's able to earn trust and educate, supplement your own education of people using the products? People like Mark use them, not use them, but like basically they're the conduit through which people are learning and they're breaking things down.
Yeah, no, trust is an important word, right? Look, there's a few things that have to happen before somebody decides to make an investment, right? They should understand how it's going to perform. They should understand the strategy, right? And that's not always clear when it comes to options. And so you're right. So the understanding and the trust, building that is a big deal, right? I think having events like this, all of the interviews that we do, the transparency, there's no question I won't answer about Yieldmax funds. Don't ask me about my dogs or anything. But I would tell you, those kinds of questions, having that disclosure, having that clear channel, I think has been really important and helped people understand that. That's right. I think trust is the word. That's it.
Interesting times to be in, to have the community members, creators in the same room and have an open conversation. It sounds like it's a really healthy dynamic as you're developing these products. Want to turn now and look forward. I'm going to ask you all sort of to paint me a picture of where you think income investing is going. I'm going to start with you, Chuck. Where do you see things going next? It could be in the space generally, or for what you all are working on?
With income investing in general, I think, obviously, with the cover call ETFs and whatnot, you just get more of these every time, right? But there's a lot of stocks out there, right, where you can get, more and more of these. And I think, like I was saying earlier, I think that's great for our underlying products, because the more options that we have to invest in and feed Fivey and things like that, then just it makes our kind of relative strength approach work a lot better. And so, yeah, I think you just get more of kind of what you're seeing, already, just enhance. So.
Yeah. For you, Mark, what's next for you? Do you have any goals as a creator? Are you trying to expand into other topics or verticals, or you double down into income investing?
Well, content-wise, again, yeah, just doing what I'm doing. Obviously, I love learning trading options myself, so expanding on that. But yeah, I wanted to branch on the other question,
Yeah.
the days of income investing, where are they headed? To me, the 4% rule is dead, right? Thinking that way is dead. So I think these funds are bringing that out as they get more popular, but only having an alternative. Oh, SCHD, you retire on that. Oh, you need $3 million. No, not happening. So, think times are changing, things are changing, and again, my channel, hopefully, again, education, as Jay said, whether it be Yieldmax, whether it be, whatever fund, my own options trading, just to expand and help others.
Right. Are you on all the channels, TikTok, all of them, or?
I just downloaded TikTok this morning.
Oh.
People have been telling me to get TikTok.
We're gonna do a dance choreography outside.
I refused because it was for kids, but
You gotta go where the people are.
The guy dropped me, he said, you gotta get TikTok. I'm like, all right, fine.
We're gonna get it going, and then it's gonna go away, and you're gonna have to start again on the new one.
Yeah,
That's-
YouTube's enough, and then Twitter. But yes, I'm finally on TikTok, I'm
Right.
on YouTube, I'm on Instagram, I'm on Twitter.
Right, smash that follow button. Jay, looking ahead to 2026, where do you see Yieldmax headed next? Product innovation, strategy, what are you guys looking at?
Yeah, the product development is always in the forefront for us, like how we continue to put out interesting products. You said SCHD, you want one of those? You want one of those with more dividend? No? What if we could do more on that? Okay, anyway.
Real time
What if we do one of these?
innovation going
Yeah,
on.
so I think, look, we're regularly filing and continuing to add and continue to respond to what's happening with our community. I think this is still in an infancy, like working with our community, working with our investors directly. It's hard in the ETF space, right? I was an advisor before, great to have a conversation with somebody, solve individual goals. This feels so much like that. So I think more and more of this makes a lot of sense. But I will tell you from like the structure and the bones of the way the ETF community works, like that infrastructure, capital markets, that is also growing fairly quickly too, right? So we're trying to help innovate there. Like the behind the scenes aspects of what many people may not realize here is there's not unlimited capacity to do these kinds of transactions, right? You could have funds that could exceed what your prime brokers are willing to let you do, right? So that kind of work has to also continue to evolve. Our capital markets team is strong. We continue to work through it, impacting the community that way. When I say the community, I mean, like the Citadels of the world, the James Streets of the world, like the market makers and the Goldman Sachs of the world. Like they want to do more with us, and we're helping them evolve too. So I think the whole ecosystem continues to grow. Like at this point, the momentum is fairly strong. You never know. Bear markets always make people a little, dodgy, but and this is not a market prediction, but I'm just saying this trend, I don't think will go away regardless.
Yeah, it's a great note to end our discussion on, but you all are here because we'd love to hear from you guys, so I think there's a mic somewhere in the midst. If not, I'll go over and you can lean. But who has questions based on what we talked about? I'll start with you, sir.
Well, Mike's behind you. There you go.
And if you could say your name too.
Sorry, Okay, yeah. My name's Todd, and I'm from Unconventional Wealth Ideas. And Jay, I have a question for you. First of all, congrats on all your success, and thanks for having us here. So the maintenance, you're growing your influence, more on Wall Street now. Can you get the maintenance down on Yieldmax so that we can all get a little bit of a break in our brokerage accounts? We can live freely out of them much easier if we can get that maintenance lowered. Fidelity has lower maintenance, IBKR has lower maintenance for Yieldmax, but can we get that for E-Trade?
I don't know what maintenance you're talking about, actually.
Okay,
So,
let me-
you mean, like the margin maintenance, like margin requirements?
Exactly.
Oh, yeah, like that's a broker decision, sure, we could always talk to them.
I've heard,
Look,
right.
every one of those brokers is going to define, like my previous life 2 times ago, right? Running the trading business at Ameritrade, which is not even a thing anymore. Like that, those companies decide what they're willing to put out there. We talk to them all the time.
You do?
We do all the time, so we can talk to E-Trade, absolutely.
Thank you, that's all. That was my big question. Thank you, Jay.
You got it.
So a big thing that came up is Robinhood. I think they went from 30% to 80% or something high without notifying their users like in a day. So I think if
We know
people,
some people at Robinhood, we can talk to them, that's fine.
yeah, it's been a big time.
I didn't realize that. So they changed the margin maintenance on the underlying on all the Yieldmaxes, or is it just all single stocks?
I think it might have been just Misty, I'm not sure, but,
All right.
When did that happen?
I don't know. Well,
I didn't mean to
A few months ago.
Recently,
Talking
okay.
about it, and they're getting margin called overnight because they're so heavily concentrated into those. And yeah, when the maintenance change comes, it's an immediate house call.
Sure,
And,
Yeah,
They need more collateral.
some give notifications, some don't.
Right, and at the same time, if you can get it lowered, then we can all afford to buy more without it weighing on our equity so much.
Mr. McGrath, do we know somebody over at E-Trade we could call? Yeah, I think so. You got it.
Thank you, Jay.
All right, we got time for a couple more. Who else has a question? I'll start with you over here, and then I saw you raise your hand over there. Okay.
Thank you for throwing out a great event. My name is Marcos Mia. I have a YouTube channel. My name Marcos Mia. We had a great interview with Jay Pestrichelli that came out this last Sunday. I think it's at 40,000 views and only getting more. And the community is really appreciating you, Jay, and kind of answering all the questions, providing some guidance to investors. Now, my question to you is, when Yieldmax first came out, I want to be honest, I wasn't the most excited about it. Maybe I was a little more skeptical, but as I learned, it's kind of becoming the biggest thing on the street. One thing is CFA charter holders, portfolio managers, when Yieldmax first came out, they kind of had some, maybe not the best things to say, and now we're seeing people switch and becoming Yieldmax believers. So there might be some CFA charter holders and portfolio managers who maybe are still on the fence of Yieldmax, and my question to you is, what do you have to say to those CFA charter holders and portfolio managers who are still on the edge of Yieldmax?
Yeah, and look, I think as an investment advisor, and even if you listen to the communities, it has to be the right product for the right investment strategies, right? Like as an advisor, I probably wouldn't, highly concentrate an individual in a single stock, right? So I think the variety in our offerings will give them more solutions. What maybe a lot of folks don't know about you is you're very analytical and you have some background in the banking industry, and that's all I'm going to say. So what I would say is when you look at it from that side, when you look at like, wait a minute, 50, 100% distribution, this has got to be a scam, until you dig in and understand like, oh, you're harvesting volatility through options. That difference, not every advisor or CFA look, they took a test, it doesn't mean they understand how to run an option strategy, right? So I think it's time in the market, it's product diversity in the market that is going to help them. We have just started scratching the surface of I'll call it the institutional community. I think there's probably a lot more to go. And we have the products out there that are building track records like Biggie and Soxy that are going to help people get an understanding of what the long-term impact could be for a product that might be more appropriate for the solutions on their clients.
Thank you.
All right, I saw a hand over. Yeah, okay.
Hi there, this is Nancy from Bloomberg. I was wondering, if you zoom out in kind of the history of dividend investing, do you think we're at a turning point? Do you think this is a new era? Would you call it a revolution? Like dividend investors as society, where do you see them? And also, what's the role in young investors, in Gen Z millennials, in that kind of obviously very fast growing community?
You take the community question first, right? Because you see a lot of that happening.
What's Gen Z saying on TikTok?
I don't even know what is Gen Z anyway, I'm too much old for that. But,
You still should know.
I think she has, yeah.
no, yeah, I mean, I know the only reason they're able to do what they do today is because things change, right? And that they allowed you to even allow these funds. So obviously beforehand, yeah, QYLD was around forever and a day, but I don't think that the individual covered call ETFs were allowed. So obviously that, kind of changed the game, and obviously, more and more people are hearing about these funds, and it's getting around and around and around. And I think as that, grows, as I explained to, old school people, maybe like my parents who know nothing about investing, or another person that I work with who would have no idea, and they think they have to work till they're 70 and old farts. I just think everything's, the game has changed.
That's your
No offense.
No offense. That's going to be the thing. So I would say, viva la revolution when it comes to yield investing. So I think the difference here, right, is you can now have yield with growth, right? So in the past, if you heard something was high yield, you're thinking what? Oh, that's 6-8% dividend on some, low-rated stocks, right? Or low-rated companies, right? So there's definitely been a change here where you can have total returns that are much more stock-like, but then have this characteristic yield. So I do think that transition is different here. It's still early. I think folks like the idea of having their asset, pay them back every single month or every single week, and they feel that benefit all the time, right? If you buy Apple or you buy Nvidia, you can move, let me watch my account go up or down, or you have that growth aspect, but here it's this payday, right? This concept of a payday that they're receiving. Again, while I think there's a part of that should always go back into the investment strategy, there's a lot of folks that I think will then use that for as long as they're investing with it, right? So they continue to put it to work, unless they're in the, what would you say, the old farts? The old farts category where then they need income to live. But I think it's this growth through yield. I'm not talking about you specifically. You just have the most gray hair here, dude. That's all I'm saying. I think it's the growth with yield together that has been really the real game changer here for folks, right? When you can put those two things together, that's why this is almost defining a new asset class, right? Like we're creating, and that comes with education, right? The last time this happened was leverage funds in 05-06, where all of a sudden the retail community loved it, they bought it, and then they understood like, oh, I can't buy both the long and short and make money both ways. They both can get hurt, right? You understand it's a trading vehicle. These are different other characteristics. Dropping the NAV, this concept of ROC, this idea of you didn't beat the underline. All of those additional education components come, but I think we want to be the ones to help lead that through. Right? So that's really, we do want to change the way people look at investing, and this is definitely a piece of it.
All right. Well, I think we're going to do a team picture outside. If you have other questions, these guys are still here. We can maybe keep the convo going, but I think thank you, everyone. Thank you so much to all of you for participating in the panel. It was a great conversation. Thanks to everyone in the audience. Thanks for coming, and I know the day's just getting started, so let's give a round of applause. And stay tuned for instructions about the program.
Great.
All right.
Oh, yes, you may leave.
Thanks everybody for tuning in. If I did happen to get a chance to ask a question, I was going to ask, I feel like they copied my Magic 8 Ball idea, and it has a Yieldmax fund that pops up every time. I don't know if you can see it or not, but it's got YMAG right now. So I was going to ask them as a silly question if this would be a good way to predict like which funds to buy. So thank you all for tuning in. Please remember to like, comment, and subscribe, and join the Discord. And we will see you all very soon. It's a video production spree. So we're going to be filming. I know, right, Max? I totally agree. And the lady, I think she's Mike's wife, she wouldn't even give me credit for it. What the heck? You know I use this all the time, right? So, I don't know. I just want somebody to say that they were at least inspired. Anyway, thank you all. See you soon. Bye.